Steve, with consumer confidence so high, why is the consumer staples sector underperforming?
I think that the underperformance that we've been seeing in consumer staples can be explained by a couple different factors. First and foremost, consumer staples are historically very much a value sector, very much a defensive sector. When you've got a market hitting new highs, by definition, that is not a defensive time. People are playing offense as opposed to defense, let's say. And they would be moving away from things like consumer staples, which are, by their nature, tend to be slower growing, but very stable in their business, which is an asset or a liability, depending on whether the environment is one where you fear underperformance or one where you want a safer spot for your money. Right now, people are not really looking for safe spots for their money, and that doesn't help the consumer staple sector. Also, some of the problem is endemic to the stocks themselves. Campbell's Soup has been a big underperformer, but realistically, they're in an old school business. A lot of the products that are sold, let's say by Mondelez, fit the same bill. A lot of processed products and packaged goods, and I think that people are tending to move away from that in favor of more artisanal brands and smaller names. However, and there's always a however, Hain Celestial to me is the exception that proves the rule, because they specialize in all sorts of organic, in all sorts of niche brands, Celestial Seasonings tea. They have a whole range of niche businesses in the consumer staples area, and yet their stock has been a terrible performer. So I'm going to attribute some of it to market preferences, some of it just to the nature of their businesses. And you may say, well, why is it performing so poorly when the consumer confidence numbers are at record highs and people are feeling good about things? Consumer discretionary, for the most part, is doing very well. And again, consumer discretionary is something that does well in more buoyant markets. So, which would be, I guess, the flip side of the consumer staples. So, if you're playing defense with consumer staples, you're often playing offense with consumer discretionary. And I think that's some of what we're seeing now. Consumers are feeling flush. We'll see if that persists into the new year. Right now, I think for another leg to help the consumer sector in general, you would want to see some wage growth. And I think it's way too deep of a topic, and too many people have discussed it without really coming up with an answer as to how we can be at full employment without really seeing any wage growth. And if and when you see that wage growth, there are other inflationary aspects to it, but one would expect that consumers would go out and spend. Another thing that remains to be seen is the full effect of the tariffs. Tariffs, to a large extent, are stagflationary. They raise the prices of finished goods, raw materials, but as the consumer sees them, finished goods, by certain percentages, so which means they can afford to buy less of them. And while there is some compensation in domestic output, that's not necessarily seen across the board. The process of the tariffs creates winners and losers, and so some industries will really benefit while others don't. But the consumer, as a big whole, as a big unit, really have to wonder whether their purchasing power is going to be hurt in some regard, which is actually inflationary. Tariff is another fancy way of saying tax. And don't lose sight of the fact that when tariffs are put on the other country, they're not. They're put on the goods that's sent from another country, and those tariffs, those taxes, are essentially paid by the consumers of those products. So if you're going to be taxing the consumer more heavily, one has to wonder whether that negates a lot of the effects of the tax reform, at least as they're seen to middle and lower income consumers, which make up the bulk of the economy. At the upper end, the consumption is a lower percentage of very high incomes, so and that really won't come close to negating any of the effect of the lower tax rates that are seen by some of the highest incomes, at least certainly depending on your state. So all in all, it's a very confusing picture, but I think right now you have a market that's very inclined to overlook defensive stocks in favor of more aggressive ones. And there are some worries on the horizon about how the tariffs are going to affect finished goods. All that continues to paint a fairly unimpressive picture for consumer staples. And I think we see that underperformance until or unless the market as a whole has sort of a pullback, and then we might see money start to flow into that sector on a defensive basis.